innovative investment bank for leveraged finance, and the winner again is Credit Suisse.
Hello, I'm Danielle Miles, Investment Banking and Capital Markets Editor at The Banker magazine, and I'm here with Mathew Cestar, Co-Head of Global Leverage Finance at Credit Suisse. Matthew, thank you very much for joining me. You won the Leverage Finance Award last year as well as this year. How does it feel to be collecting it 2 years in a row?
Very happy to be here. We're super excited to win it for a second year. I think it's kind of a reflection about the activity at the firm. This is kind of one of our core areas of expertise, leverage finance, and it's a great testament to our clients who are willing to come back to us many times to do some of these financing.
So some of the deals that the judges were particularly impressed with are the Virgin Media receivables financing, as well as reopening the UK and French high yield market after Brexit and the French elections. But what stands out to you as the real highlight deals over the last 12 months?
I mean, there's many deals and many important clients, but a couple deals I think you just referenced there. This Virgin financing that we did, which was a really kind of a solutions-oriented financing. One of the things we focus on is figuring out how the capital markets can step into the shoes of what traditional lenders may have done. Mm-hmm. And so that was a specific need that this borrower had, Virgin. And so we crafted a kind of a very interesting deal there, and that was nice enough to be recognized by you and a few others. The other thing that we do a lot at Credit Suisse is really focus on these large, global, multi-product and multi-currency deals. And I think something else you've highlighted for us was this Dell financing, which is not just the size of it, but also some of the scale and complexity of that. And so those are two examples of what we've been focused on and what our clients have allowed us to work on last year or so.
And obviously there's lots of changes happening within Credit Suisse's investment bank. How committed is the bank or the group to the leverage finance business?
Sure. So leverage finance, we've been fortunate to win lots of awards like this one and others, and so it's right at the core of what we do at Credit Suisse. So we're really focused on those businesses that are really client-facing, that have high returns for us, that are very meaningful for our end clients. And so this leverage finance business, both regionally in New York and then globally, kind of meet those characteristics. And so there are a couple big themes happening globally, including in this region, which is the growth of capital markets. So as bank lenders start to wane slightly, these capital markets investors have been stepping in. So we think there's a long-term growth story here, and that's in part why the firm is very happy to support that, both in terms of financial investment, human capital investment, and other.
And thinking about the market more broadly, obviously volumes have been at record highs, I understand, for the first half of this year, and there's a very strong pipeline, I hear. What's the outlook for the rest of the year?
Yeah, so we're really pleased. So record volumes both in our loan products as well as our high yield bond products for the first half. We think that's going to continue. There's been a notable shift away from some of the refinancing activity, so some of the activity that really characterized that first 6 months, into more M&A driven activity. So I think that's the change in tone that's going to drive the next 3 to 4 months before we get to year end. We think it's a longer term trend also for the next several quarters, and so I think that shift to M&A plus this sort of low interest rate and low sort of default rate environment really lends itself to raising capital in the debt market. So I think that continues for the most part.
A lot to look forward to then. Thank you very much for your time, Matthew, and congratulations again.
Super to be here. Thanks for your time.